Welcome, Bitcoin fam, to No. 1 Daily Bitcoin Show. That's right. In today's show, I'll be breaking down the latest Bitcoin technical analysis and sharing 5 Bitcoin charts predicting Bitcoin price rally towards $100,000 by this May. We'll also be discussing dinner with the president. Whales go crazy as the Trump coin skyrockets off the back of the news. The largest hodlers of the coin get to meet the president for an alleged dinner. Max Kaiser says Trump coin is going to zero against Bitcoin. Trump doesn't know that the meme coins actually accelerate inflation. We'll also be discussing U.S. banks are free to begin supporting the biddy, according to Michael Saylor, as well as Saylor holding 10 million Bitcoin won't threaten the protocol, according to Saifedean Ammous, author of the Bitcoin Standard. We'll also be discussing China may be shifting from U.S. treasuries towards gold, and this is according to the BlackRock executive, and also a shift towards crypto, as Bitcoin is digital gold. We'll also be discussing ARK Invest up since 2030, Bitcoin bull case scenario to 2.4 million per coin. I'll be breaking down the latest ARK Invest update. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. If you're new to the channel, very important to smash the likes. Go ahead, subscribe. We're the #1 day of the Bitcoin pod. Then ring the bell. Turn on all notifications to receive daily premium crypto newsletters every single day, 7 days a week, just like this. Happy TGIF. So yeah, today is April 25th, 2025. Lots of bullishness in the news. Markets pumping accordingly. 100,000 in play. We're up over 2,500 on the day, which is a beautiful thing. Let's kick it off with our market watch as we do each and every day. Pulling up Coin 360. You can see Bitcoin up 2.4% on the day, Ether up 2%, Sui up 10%, XRP in the red, Cardano and Tron all correcting and in the red. And checking out coinmarketcap.com. The current crypto market cap is currently almost 3 trillion. We're so back, broskies, 2.99 trillion. And the Bitcoin market cap is just shy of 1.9 trillion. A good sign of the times, 100,000 incoming. I'm calling it. We have 105 billion worth of volume for the past 24 hours, and the Bitcoin dominance has been on the rise. Currently 63.5%, with Ether dominance all the way down at 7.3%. How high do you think the Bitcoin dominance will go this cycle? Holla. And checking out top 100 crypto gainers past 24 hours, we got Satoshi Vision up 45%. I wonder what caused that pump. Virtual up 24% and Whiff up 19%. Let me know which alts, if any, you're bullish on for the bull. Holla at your boy. And checking out the crypto bubbles, so we get that visual perspective on the day. And as you can see off to the update from yesterday, where virtually everything was in the green, similar today, I'd say 80-20, green over red. Again, Satoshi Vision leading the pack, up almost 50% on the day. And zooming out, broader perspective for the week, very similar, maybe 90+% of the alts actually pumping. And for the month, I'd say 50-50, half red, half green, but it's better than last week when we checked the monthly. It was like 90+% red. So things are turning around slowly but surely. And checking out the crypto greed and fear index. Today we're 60 greed, yesterday at 63, last week at 33, last month at 47, and neutral. And checking out the infamous time chain calendar. We're currently on block number 893,918. We have 156,082 blocks to the next halving of 2028. And you can currently exchange one fiat monopoly dollar for 1,048 sats. So pick up the sats, put down the gats, pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. And if you don't know, now you know. So without further ado, let's dive into our TA and we'll pull up some of the live charts. I got some bullishness to share with you here, which I'm excited to share. Headline here today reads 5 Bitcoin charts predicting 100,000 price rally towards 100,000 by May. And considering May is less than a week away as we're approaching the top of the month here in April, so send it. Let's break her down, shall we? Excuse me. So yeah, the Bitcoin daily chart formed a textbook double bottom, confirming a breakout above the neckline resistance of 87.6. The structure projection measured moved to 1,500 or above. Momentum indicators are like the RSI, supporting the thesis, staying in bullish territory with more room to expand. Meanwhile, the 50 and 200-day exponential moving averages have flipped into support, offering additional tailwinds. Also, we have a bull pennant setup, eyeing 6 figures on the hourly time frame. And like I said, shortly we'll be pulling up all these live charts, but you can clearly see the bull pennant target sitting just above 100,000. I should say just shy of 101. So only a matter of time before we recapture it. Also, we have the Bitcoin falling wedge breakout targeting 102. So as far as the 3 day charts, it compelled the falling wedge breakout with a price resistance of 94,000, moving closer to 102,270. And I'll give you another bullish one. The Binance heat map shows liquidity magnet also at 100,000. So we have various indicators all suggesting right now that 100,000 is in play, which ultimately means 100,000 in play. Also, Bitcoin profitability increases post breakout. There is a lot of institutional FOMO with the new company from Jack Mallers being the CEO, launching with 42,000 Bitcoin. It's a Bitcoin acquisition company to challenge and rival the likes of Strategy B, Michael Saylor's company, which we'll dive into here in a little bit. But I do want to pull up some of the charts and show you some live chart action. Jackson satisfaction for the broskies. So let's pull this baby up. Give me a second. You should be able to see here in your screen. So yeah, this is via TradingView, via Coinbase, 1 hour chart, bullish pennant, very bullish formation. Bull scenario, which we like to see on the hourly, sitting at 102,762. So the bullish pennant target is just shy of 103,000, which would take us within striking distance to price discovery, which is currently 109.3, which is the all-time high achieved inauguration day all the way back on January 20th. And it's been corrective and trading sideways since, so hopefully we can regain this momentum here potentially today, recapture 100,000, if not today, over the weekend, Sat and Saturday. Why not? Zooming out for the 4 hour chart. Also very bullish overall with the rising wedge breakout. As you can see, for the past 4, 8, 12, 16 hours, we've been pumping, forming green candles on the 4 hour chart. There's a rising wedge formation. However, there is a target sitting at 85, which is a God candle down from the current price action as we're fast approaching 96. And zooming out from there, let's take a look at the daily chart. Again, via Coinbase, via TradingView. The daily chart. Also, you can see a lot of momentum building here. We have 1, 2, 3, 4, 5, 6, 7 consecutive days printing a green daily candle, which is a good sign. We have a rising wedge followed by a falling wedge, and it looks like we're starting to rise again. We have a bull scenario, which will take us back to price discovery, just shy of 112,000 on the daily. Bull scenario, you can see in the red pinkish target on your screen, just shy of 69 Gs. Let's go. And checking out the weekly, you can see 1, 2, 3 green consecutive candles. This one hasn't closed yet, the big mega bull candle for the week, but we do get a close on Sunday. So things are on the up and up. I think the bullish momentum most likely to transpire into the month of May. And we also have the 124,000 cup and handle target in play here for the second quarter. Will it happen potentially in the month of May? You guys let me know your thoughts. And zooming out a little further, we'll take a quick glance of the monthly. And on the monthly chart, as you can see, April has been bullish, and it's about time considering the past 2 months have been bearish. So we're on the up and up. Let me know where you feel the pretty little bitty is likely to take us next. Dinner with the president. Whales go crazy as the Trump coin skyrockets. Max chimed into this. Trump coin is going to zero against Bitcoin. Trump doesn't know that the meme coins accelerate inflation. And if you don't know, now you know. But yeah, we're living in wild times, to say the least. Imagine being told several months ago that the POTUS will have his own meme coin. Not only that, but his wife as well, the first lady, Melania coin. The meme token would skyrocket to a multi-billion-dollar market cap before it plunged 90% within weeks, which is all factual. Or at the same, the president, who used to be against the industry, which is a fact, would praise the coin on his own social media channels, or that he'd invite the top 220 holders of that said meme to have dinner with him, as shared here by Callio. Never thought I'd see the day. The president of the U.S. has a website with a leaderboard on it. So very smart man. He created some game theory within his community. And you can see the top holders here, how much they have of the Trump coin. It shows you the wallet address, and smart play, if you're to ask me. Well, it's 2025, and all of that has already happened in the past 3 months. The dinner info was sent out yesterday, sending the token flying. It had declined to $9 after peaking at $80 following the January launch, but shot up to over $16 within minutes as investors rush to get in on the hype. The price uptick resulted in Trump charting a 7-week high. However, this is obviously a whales game, of course, since most of the big purchases were worth millions of dollars, or maybe even insiders, something in which which the project has been accused of before as well. As Look on Chain shares here, a longtime Trump liquidity provider removed liquidity from 2 wallets 2 hours ago, receiving 211,000 Trump worth 2.7 million and 18,000 Solana. Now both wallets are in the top 220 holders. So ultimately, if you're a whale, you can just hold some Trump coin and pretty much have a guaranteed invite to wherever he's holding this event at, whether it's at the White House or Mar-a-Lago. You know what I mean? But yeah, right now the top holders have just a few million. So if you want to meet Trump, hold some Trump coin. Just good luck. Hopefully you don't get wrecked. Some used only the hype with probability little to no intention of attending the actual dinner. The whale spent 5 million USDC to purchase 407,000 Trump at $12, only to sell the stash for 732,000 profit within less than 30 minutes. So my understanding is this guy got the news before it broke on social media from the website. So he knew it was about to pump. He made a significant investment using 5 million, and then he cashed out a $732,000 profit within 30 minutes. Welcome to crypto, broskies. There's also one sad story described by Look on Chain. The analytics platform said the entity dumped 630,000 Trump tokens just before the dinner news. Ouch. As such, they missed out on a potential $4.5 million worth of profit. Obviously, it works both ways. And just look at that price acceleration off the back of the news. So if you can front run the news of a major event, such as with the Trump meme coin, there's a lot of gains to be had, obviously. But clearly, the average person doesn't know about that, and they end up buying at the top and getting wrecked. So Max does make a great point here, as Trump doesn't know meme coins accelerate inflation. So if Trump is trying to keep a strong dollar, you want low inflation, and pumping this shit coin is only going to create more inflation. But here's the silver lining: bullish for Bitcoin. So there you have it. Thanks, Trumpster. I mean, it is what it is. So let's continue with the news. We just discussed the latest with the Trump coin. Now let's discuss the big news of the day, really, is regarding the Bitcoin banks. U.S. banks are free to begin supporting Bitcoin. Here's the insights from Michael Saylor, but I also want to share this. Your local neighborhood bank in America can now buy, sell, and hold Bitcoin as of April 24th. The Federal Reserve, proof of work here on your screen, has withdrawn its previous letters that had forced banks to get special regulatory permission first for any Bitcoin service, preventing the technology adoption. And this is directly from the Fed website, Board of Governors on the Federal Reserve System. Federal Reserve Board announces the withdrawal of the guidance for banks related to the crypto asset and dollar token activities and related changes to its expectations for these activities. And it's official as of yesterday, April 24th. So let's dive a little deeper into this. Bitcoin adoption amongst U.S. financial institutions can see a major boost after the U.S. Fed withdrew its guidance discouraging banks from engaging with crypto. Probably a part of the reason we're pumping so much as well, besides the institutional FOMO. So yesterday, the Fed withdrew the 2022 supervisory letter that served as guidance to deter the banks from engaging in crypto and stablecoin activities. The withdrawal spurred a notable uplift in Bitcoin investor sentiment. As outlined right there, the 2022 guidance initially warned crypto may pose risks to investors and the stability of the U.S. financial system, and that was all a result of Operation Choke Point 2.0, Gary Gensler and all those criminals, drug traffickers, anti-money laundering, tax avoidance. The Fed's move means the banks are now free to begin supporting the bidding. This is according to the GigaChad, co-founder of the world's largest Bitcoin holding firm, Strategy B, which he shared here. Banks are now free to be supporting the bidding. That's right, big deal. The Fed's decision is a significant development as it will simplify the path of the institutional adoption, according to the co-founder and CEO of blockchain regulatory firm Ethereum. Quoting her here, the withdrawal of this particular guidance ensures that crypto assets will be overseen through standard supervisory processes. We still need to have genius and stable bills to be passed to further harmonize the crypto activities amongst the Fed supervised firms and other market participants. The combination of the legislative effort will be the main driver behind the institutional adoption. Can you say institutional FOMO like a mofo? Can you say supply shock? Can you say 100 G's? Can you say 10x that mofo to a million? Can you say 10x it again to 2 milli? 2.2 million in play as per the high priest, your holiness, Max Kaiser? What are your thoughts? The stablecoin transparency and accountability for the better ledger economy, or the Stable Act, passed the U.S. House Financial Service Committee with a 32-17 vote April 2nd. The bill aims to create clear regulatory guidelines for dollar-denominated stablecoins. The Genius Act, short for guiding and establishing national innovation for the U.S. stablecoins, passed the Senate Banking Committee by a vote of 18-6 on March 13th. Game on. Fed shift marks the end of the regulatory hostility. That's right. Take that, lizard folk. So if your local bank starts adopting Bitcoin, do you know what that means? banking-related crypto products. For example, you ever heard of a Bitcoin-backed loan? It means Bitcoin's already established, no questions asked. It's a perfect store value, it's perfect money, but it's also pristine collateral, which means it's perfect, it's flawless collateral. So you bet your bottom dollar the banks are going to want to hold in custody your Bitcoin, and as of now, they'll be able to provide those services. It's only a matter of time. So this is a massive bullish news swing right here, which will only help usher in these higher prices and price discovery. And I think we're witnessing the market reflect some of these laws, which are changing in real time. Next story of the day. Headline reads, after the infamous freeze frame, of course. Here we go. Sailor holding 10 million Bitcoin won't threaten the protocol, according to Cathie, author of The Bitcoin Standard. And let me know if you've read The Bitcoin Standard. Michael Saylor, that was the first book I read on Bitcoin, by the way. Michael Saylor's strategy, hypothetically hoarding nearly 48% of the total Bitcoin supply. Imagine that. Wouldn't pose any risk to the Bitcoin protocol or the price, according to Cathie, quoting him here. If Michael Saylor ends up with 10 million Bitcoin, which he won't, by the way, that's way too many, what is he going to do? So this is a hypothetical. He is just likely going to leverage them to buy more Bitcoin. And this was according to the interview he did with Mr. Pompliano. Ultimately, I don't see how it would threaten the protocol in a serious sense. You know how some FUDsters are like, but BlackRock and Saylor own all the Bitcoin. There's none left for us plebs, so why even get involved when they own so much Bitcoin? Well, here's the other side of that coin. Amos said if Saylor managed to accumulate 10 million Bitcoin, he would be unlikely to wake up one day and say, let's try to hard fork this so we can make another 5 million Bitcoin supply so I can have 15. He reiterated it would diminish the value of his existing 10 million Bitcoin, which makes a great point. He's fully vested at that point. Several crypto market participants have previously raised concerns about the bitty whales and at what point their holdings could lead to risks like market manipulation, centralization, or liquidity issues. And at the time, Saylor's firm strategy currently holds 538,200 Bitcoin worth over 50 billion, according to the Saylor tracker. Meanwhile, BlackRock's IBIT ETF has net assets worth 54 billion, so even more Bitcoin than Michael Saylor's company. So collectively, they have over 1 million Bitcoin, which is mind-boggling. So BlackRock has 585,000 and Strategy has 538,000. That's close to above 1.1 million Bitcoin. So collectively, these two companies have more Bitcoin than Satoshi. Let that sink in. Collectively, the two firms hold approximately 5.3% of the Bitcoin supply. However, Saifedian said it is not a cause for concern. Quoting him again, it's not like Saylor or Fink owns all those Bitcoins. They have shareholders who own all those Bitcoins or ETF holders that own those Bitcoins. And that's a fact. For example, ironic enough, the primary shareholders of MicroStrategy/Strategy B is Vanguard and BlackRock. You can't make this shit up. They own the majority shares of like over 90% of the companies in the S&P 500. They have like a monopoly. It's insane. Quoting them again, to the extent BlackRock and Strategy hold those, they hold those because they are doing their fiduciary share of duties to their shareholders and ETF holders in a satisfactory way. Ultimately meaning the Bitcoin doesn't belong to Saylor and to Larry Fink. It belongs to the shareholders who have vested interests, obviously, in it. But anyways, Amos explained that if BlackRock or Strategy ever started to manage their holdings in a way that's harmful to the shareholders or the ETF holders, or starts abusing their position, that's when investors would sell and look for other ways to gain exposure to Bitcoin. Kind of like what we witnessed with the Grayscale Bitcoin Trust, which was once the biggest holder of Bitcoin, and then we had all those outflows, since the launch in January of last year, right? So now, big news. We'll dive into deeper later. 21 Capital, a new Bitcoin treasury company led by Strike founder Jack Mullers, with the support of Tether, multi-billion-dollar company, SoftBank, and Cantor Fitzgerald, is looking to supplant Strategy to become the superior vehicle for investors seeking capital-efficient Bitcoin exposure, and that's going to be the primary purpose of the company, a Bitcoin acquisition company. So game on. This is the game theory playing out in real time. Next story of the day. Regarding China, there's big news, and then the big news from ARK Invest. Let's get it. Headline, China may shift from U.S. Treasuries towards gold and crypto, according to the BlackRock executive, according to the interview on CNBC. This is mainstream news, broskies. Central banks, particularly China, may start to shift away from the U.S. Treasuries, exploring alternatives such as the pretty little bitty and gold. According to Jay Jacobs, BlackRock's head of the thematics and active ETFs. This is the head, the HNIC. In a recent interview with CNBC, Jacobs said that the geopolitical tensions and the rising global uncertainty are accelerating diversification strategies amongst the central banking cartels, which is what they truly are. He pointed to the long-term trend where countries have been reducing their reliance on the dollar reserves in favor of assets like gold, which recently just hit a new all-time high, roughly 3,500 per ounce. And of course, gold 2.0, the superior thing, the Bitcoin. Quoting Max, gold is the poor man's Bitcoin. Sorry, Schiffmeister, 'tis what it is. Quoting Jacobs here, this whole diversification away from traditional assets and into the things like gold and crypto probably began 3-4 years ago. He said the recent geopolitical fragmentation has intensified and pushed towards alternative stores of value. Jacobs referenced growing concerns about the freezing of $300 billion in Russian central bank assets following its invasion of Ukraine, suggesting such events have prompted countries like China to rethink their reserve strategies. And we also know the BRICS movement clearly is the de-dollarization of the US dollar. And during the interview, Jacobs said that BlackRock, as we know, is the world's largest asset manager. They control roughly 11 trillion in assets under management, have identified geopolitical fragmentation as a defining force for global markets over the coming decades. Quoting them again, we really identify geopolitical fragmentation as a mega force that is driving the world forward over the next several decades, or dare I say, centuries. I'm just saying. Notably, Jacobs is not alone in stressing Bitcoin's declining correlation also with the U.S. equities. As we know, Bitcoin's on its own trajectory. It's on its own vector. Alan Slovenik shared here, Bitcoin starting to act like gold 2 weeks ago. The great decoupling, as you guys know, we've been covering here on the stream. Quoting QCP Capital, with equities finishing last week in the red and extending an April drawdown, the narrative for the Biddy as a safe haven or inflation hedge is once again gaining traction, because that's what it is. Should this dynamic hold, it could provide a fresh tailwind for the institutional Bitcoin allocation. Nippinator hears the word tail and he goes wild. Bring the tailwinds. I am so ready. All right, now for our feature story of the day. ARK Invest ups its 2030 Bitcoin price bull case scenario prediction to 2.4 million per Bitcoin. Let's break this baby down. And speaking of ARK Invest, shout out to their founder, the one and only Cathie Wood. That's right. Cathie Wood, always up to no good. In a good way. A billion-dollar asset manager giant ARK Invest has raised its bull case Biddy price target from 1.5 milli to 2.4 million by the end of 2030. And FYI, that's only 5 years out, broskies. Driven largely by the institutional investors and the Biddy increasing acceptance as digital gold. ARK's bear and base scenarios for the price of the Biddy were also bumped up. Bump it up. 500,000 and 1.2 million. I'll take it. ARK research analyst David Puel said, and I believe he's the creator of the Puel multiple, which we commonly use with TA. The new bear and the base targets were bumped up from ARK's 300,000 and 710 Bitcoin price predictions on February 11th. Another divine omen. February 11th, FYI, is my birthday. And of course, 11 is a divine omen, and they're up in their prices. I mean, I dig it. ARK's price projections were modeled on Bitcoin's total addressable market penetration rate, broskies. You gotta love to penetrate. The percentage of the Bitcoin total addressable market that it could capture in certain cases in the Bitcoin supply schedule. So here's the latest update. 2030 Bitcoin price target with ARK assumptions applied to the active supply. As you can see here, the 2030 price target active supply bear scenario is 500,000 per coin by 2030. The base case for the broskies, 1.2 million, and then the bull scenario, 2.4 million per coin. Now I'm going to compare JV's personal price targets, particularly for this cycle. My bear scenario is 222. My base case is 420, and my bull is 1.1 million, and Max Kaiser's bull scenario is 2.2 million per preload Biddy, which is pretty much right in alignment with ARK Invest, only Max is anticipating that even sooner. Quoting Puel here from ARK. Institutional investment contributes to the most of our bull case. Puel estimated the Bitcoin would achieve 6.5% penetration rate, which is pretty modest, into the 200 trillion financial market in a best case scenarios, and that figure excludes gold. Now, what if we were to double those numbers and we achieve, let's hypothetically say 13%, we can double those price targets. Just FYI, it's all based on pretty standard numbers. Bitcoin's acceptance as digital gold was also a major contributor to the lofty estimate. Pure estimating that it could capture up to 60% of the gold's 18 trillion market cap. And now we know that gold hit a new all-time high. The market cap's closer to 22 trillion. And what if hypothetically we captured 80% or 90% of the gold market cap, which would send the Bitcoin roaring that much more? Who cares about a roaring kitty, a boring kitty? Not me. I'm for the bitty. I'm for the nippinator, fam. Bitcoin becoming a safe haven as emerging markets was the third largest contributor to the ARK 2.4 million bull case prediction at 13.5%. The Bitcoin use case has also the greatest potential for the capital accrual, according to Puel, pointing to the Bitcoin ability to protect the wealth, the ultimate store value, right? And you can't confiscate it from, and also from inflation and devaluation of the developing countries, keeping in mind all that fiat is being hyperinflated into zero. Nation state also and corporate Bitcoin treasury strategies such as the United States, China, Russia, etc., and Bitcoin financial services, now that the banks can custody the Bitcoin, buy and sell the Bitcoin, also factored into the ARK's Bitcoin price projections. And that news was official as of yesterday, April 24th. So as you can see here with the penetration rates, so it's all outlined there in their report. ARK's Bitcoin predictions are bold. 2.4 million price tag will send the Bitcoin market cap to just shy of 50 trillion. Today, we're not even 2 trillion, family. So assuming that the Bitcoin total supply will have reached 20 million by the end of 2030, and as we know, there can only ever be 21 million Bitcoin in circulation, and they estimate 5-6 million are lost, gone, or stagnated forever, Laura. Now, a 49.2 trillion valuation would be also larger than the current gross domestic product of the U.S. and China combined. It also puts pretty little bitty in a good position to overtake gold as the world's largest asset, which it will, mark my words, only a matter of time, which currently boasts a market cap of 22.5 trillion. Now that the gold hit a new all-time high this week. Even ARK's barren base targets of 500,000 per coin and 1.2 million would mean Bitcoin needs to increase at a compounded annual growth rate of 32 and 53% by the end of 2030 at the top of the decade, a return that isn't achieved too often for assets that have already notched trillion-dollar valuations. But again, Bitcoin's its own beast on its own vector, and that's a fact, Jack. Since then, Bitcoin has recovered from the 2025 low of 74, soaring back as of today, back above 95 Gs, while the Trump administration has officially established the strategic Bitcoin reserve via the executive order, as well as the digital asset stockpile. And if you don't know now, you know. Let me know your thoughts. Let me know your predictions. Do you agree, disagree with Cathie Wood's ARK Invest 2.4 million bull scenario for 2030? 1.2 base case or 500,000 bear scenario? Let me know if you agree, disagree, and I'll read your comments out loud. And welcome everyone to the Q&A segment of the live stream.